What if I told you that the exact zones where most retail traders lose money are the same zones where professional traders make their biggest profits? Today, I'm going to show you how to identify these flip zones and position yourself on the winning side of every major market reversal. Look, most traders struggle with reversals because they don't understand how institutional players think. They see a support level break and panic, or they chase a breakout and get trapped. The reason? They're missing the critical concept of flip zones. A flip zone is where market behavior completely transforms. It's the area where what used to be strong buying pressure suddenly becomes strong selling pressure, or vice versa. This isn't theory. This is how professional traders identify high probability reversal points and avoid the traps that catch 90% of retail traders. By the end of this video, you're going to have a complete trading system in your hands. So let's get started. Look, the market has two types of forces, buyers and sellers. When these forces shift, that's when flip zones are created. Let me explain with an example. Previously, price was dropping from a certain area where sellers were strong, but suddenly that same area starts attracting buyers. This transition point, that's your flip zone. These zones tell us that market sentiment is changing. When institutional players reverse their positions, these zones form. Imagine the market is moving down. Lower highs and lower lows are forming. Everything looks bearish. Then what happens? Price comes to a specific zone where sellers were previously strong, but this time buyers are so strong that price goes back up. A higher low forms instead of a lower low, and the market structure breaks. This is the transformation. The seller's zone has now become the buyer's zone. How do you get confirmation? Price needs to break the previous high. When this happens, you'll know the trend has reversed. Bearish flip zones, the complete opposite scenario. The market is moving up, higher highs are forming. There's a strong demand zone where price previously bounced. But this time when price returns, buyers are weak. Price can't reach the peak, a lower high forms, and sellers dominate. When price breaks the previous support, you get confirmation that a downtrend is about to begin. How to identify on charts? Step 1. Understand market structure. First, check if price is in an uptrend or downtrend. Look at where recent highs and lows have formed and see if any strong supply or demand zones are visible. Step 2. Mark key zones. Choose a time frame. I prefer 1 hour for detailed analysis. When marking supply zones, look for areas where price dropped sharply, where large bearish candles are visible, or where there was a sudden drop after consolidation. When marking demand zones, look for areas where price moved up sharply, where strong bullish momentum is visible, or where there was a sharp rally after base formation. Step 3. Look for failed reactions. This is the most important part. A flip zone only forms when price reaches a zone. You get an initial reaction like a small bounce or rejection, but there's no follow-through, and price moves in the opposite direction. This failure is the signal of the flip. Step 4. Wait for structure break. Patience is essential. Until market structure breaks, previous high or low, don't take the trade. Break of structure confirms that an actual reversal is happening, not just a temporary pullback. The role of liquidity, how to avoid smart money traps. This section is extremely critical. Many traders understand flip zones but still lose. Why? Because they ignore liquidity. What is liquidity? In simple terms, these are areas where retail traders place their stop losses. Common liquidity areas include behind swing highs and swing lows, below or above trend lines, and previous support and resistance levels. Big institutional players need to enter large positions. They need orders on the opposite side. What do? First, they sweep liquidity by hitting retail stop losses. Then they enter their actual position at a discounted price. Then the market moves in their intended direction. Flip zones plus liquidity equals winning combination. So, whenever you identify a flip zone, ask this question. Has this flip zone swept liquidity? If yes, then entry at the flip zone is valid. If no, then you have two options. Either wait for liquidity sweep, then take entry at the extreme zone, or wait until the next major supply or demand zone. Before moving to the practical example, I need to talk about something crucial. Your broker. Here's the truth. You can master flip zones perfectly, but if your broker is feeding you delayed data or manipulating prices, you're going to lose money. Flip zone trading requires precise entry points, and if your data feed is delayed by even a few seconds, your perfectly planned trade becomes a losing trade. This is why our team at BrokerCheck has spent months researching and reviewing the best brokers in the market. Visit BrokerCheck at the link below in the description. You'll find detailed reviews of top-rated regulated brokers and a comparison tool where you can compare them side by side. All right, let's get back to the practical example. Suppose price is in an uptrend and a flip zone has formed suggesting a reversal. For liquidity analysis, check if there's a liquidity pool below recent swing lows. Is there a trend line with stops below it? Was liquidity swept before flip zone formation? If liquidity hasn't been swept, price might ignore the flip zone and first go down to grab liquidity at the extreme demand zone. If liquidity has been swept, entry at the flip zone will be high probability. Markets evolve, you should evolve too. If you follow these principles and practice consistently, flip zones can become a deadly weapon in your trading arsenal. Creating these videos takes a lot of time, effort, and research. If you got any help from this video, please smash that like button. It's the only motivation for us to keep making videos like these. Subscribe to the channel and hit the bell icon to get the latest updates.